Shares of Chipotle saw their worst day in years after the chain announced lower than expected in-store traffic for a second quarter in a row. In the Cameron Mitchell Restaurant Group, a difference between lower and higher priced restaurant sales could also point to a more cautious consumer. And joining us right now to talk more about it is Cameron Mitchell himself of Cameron Mitchell Restaurants. He's the founder and CEO, and we check in with him frequently on this stuff. Cameron, let's talk a little bit about how the consumer looks from your perspective.
Well, good morning, Becky. First of all, it's a pleasure to be with you this morning. I would say the consumer is getting to the end of their rope. I think they have almost, they're still spending. We're still getting traffic. And actually, we're seeing the first increase in same-store sales we've had in 2 years, starting last month and the month before and heading into this month. So cautiously optimistic. But as far as price goes, we know we're at the top end of our ability to take price in the market. And I'm concerned we were not going to raise prices the second half of this year. And with meat prices jumping the way they have, it's a significant impact on our P&L. I'm not sure we're going to be able to hold our pricing here in the second half of the year. We'll see how that works out.
How do things shape up from back in the pandemic days when we used to talk to you when you had to close everything down, then you saw higher wages, then you saw all of the constraints with inflation that came through because of supply chain issues? How does that time frame manage to compare to what you're seeing right now?
Well, obviously working through COVID and the after effects of COVID was tremendously difficult. But I would tell you that, in mid-23, as sales started to fall, as the COVID effects started to wear off, up until today, these past 2 years, in my 45 years in the restaurant business, have been very difficult to maintain profitability. We were down in profit last year, and in the second half of 23, first half of this year, we're down in profit. It has taken everything we have in the tank basically to combat the increased costs that we're being faced with via labor, food, anything else that we buy, construction materials, interest rates to maintain. And I'm very sensitive to the independent restaurants out there that don't have the resources that we may have as a larger company to combat some of these issues. And we're seeing a lot of closures out there today as a result in the restaurant business.
Restaurant business is always tough. What do you think makes it tougher? Is it the inflation and then those higher prices that have been sticking around?
Yeah, I think that, it's almost everywhere you turn, whether you're buying, produce or whether you're buying your cost of goods or labor. Labor is up, and which is great for our industry. It's great for the people of our industry, but we can't combat it with price. And so, but the good thing on labor, I will tell you, is turnover is an all-time low. People are staying, they're not moving, they're staying put and spending more time with the company. So that's good news. But it's just challenging out there right now. The consumer is starting to spend a little bit less. They might be ordering less desserts or less appetizers, et cetera. So it's not one thing, it's another. And I'm very optimistic, though. Hopefully the consumer can hold out here as we're starting to see here these past couple of months and the first glimmer of hope with same-store sales increases.